Anyone? Or any question? Feel pretty good? Okay, so my debits don't equal my credits yet. So do I need a debit or credit? I'm going to need a credit for $45. What's the credit? Oh, no. It's inventory, yeah. This is where I'm guessing most of you will mess up if you do mess up. It's not a discount. We're decreasing inventory because, let's do the T account on this.
This discount when we sell.
Yep. Yep. Sales discount is when we sell, and we'll see that later. So the inventory, we bought inventory for $3,000, but then we also included $200 in shipping. Then we returned $750. So as of September 9, our inventory was worth $450. But since we got a discount on it, we got a $45 discount. Oh wait, does that make sense?
We did add the 200 with the inventory.
What's that?
In the inventory, when we subtracted the 750, we did add the 200, so I think that's everything.
Oh, the 200 shipping costs you're talking about. That's, no, because I don't think we would take that off because we spent $200 on shipping. Unless we got like a refund for shipping, I think then we would take it away. Did they teach differently? Did they take a fourth of the 200 off?
No.
No, yeah, I don't think they would. Unless you get some kind of, like if they paid you back for the shipping. I think we leave the shipping alone. So let's see, 2, 5 minus 45, 2405. So there's the true value of our inventory, 2,405, which is how much we officially spent on the inventory with the discount, plus the $200 in shipping that we spent on the first. Yeah?
So are they on the following, like, where you exactly got cash off? Like, how do you get
You're confused on how we got this number?
yeah, cash
The numbers or like the
in numbers?
The numbers, yeah. Okay, so we owed $202,250, right? But we got a 2% discount. So you can do that multiple ways. You can multiply that by 2%, which means we're getting $45 off. So you take 2,250 minus 45, and that'll give you 205. So that's how much cash we're spending. And then the inventory, we're crediting at 45 because we got a $45 discount, which we're going to decrease the inventory value by 45. Any questions on this? This T account might, hopefully didn't confuse you. You don't really need to know the logic of this T account right now. As long as you know these journal entries, you'll be fine. So the last corner, we've got September 20th. We paid the inventory in full. So this is assuming we didn't pay it on the 9th, we're paying it on the 20th. So on September 20th, if we paid for the inventory, did we get the discount?
No.
No, no discount. So we would debit accounts payable for the amount we owe, $22.50, and then we would credit cash for $22.50. Any questions? I know that these are definitely tough, and especially because we just learned them. But just repeating them over and over. They're the exact same every time. Move on to selling inventory, which is a little harder. Maybe. And I changed this again in the highlight. So we sold inventory for $8,000. It originally cost us $3,000. Terms $315 at $45. So on September 21st, we sold the inventory. What's the journal entry? There's two parts, two journal entries we'll make. One to recognize the revenue, one to recognize the expense. What's my revenue journal entry? Sales revenue, debit or credit?
Debit.
We credit sales revenue. For how much? 8,000. And then we debit not cash, accounts receivable. If they paid cash, yeah, it would be cash, but since we have some terms up there, 315 net 45, you assume they have not paid cash yet. So they're at recognizing the revenue. How about my expense? What's my expense?
3,000.
Okay, yeah, that's,
Cost of goods sold.
there we go. Cost of goods sold. That's my expense. And then credit what?
Inventory.
There we go, inventory. We're selling inventory, so we will decrease the asset. This is the journal entries for selling inventory. It's the exact same journal entry every time. The numbers will just be different. Okay, so we sold the inventory. And then the next day, they returned I might change this too. Let's say they returned a fourth of it again. Okay. So when we're returning inventory, or whenever there's a return, as I said before, we're just taking the original journal entry and flipping it. With one caveat for this, but. So what's my journal entry for the return?
Sales revenue, 2,000.
Okay. Someone said debit sales revenue, which would be correct if you followed my directions, but it's not. That's the one exception here. We would debit sales revenue, but in accounting we don't do that. We have a different account to take away from revenue. Sales returns, yep. Sales returns and allowances. we'll debit that, and then credit what?
Accounts receivable.
Accounts receivable, yep. So everything else, we're just flipping it. So how about for my other journal entry? What am I gonna debit?
Inventory.
Inventory, just flip it, and then I'm gonna credit cost of goods sold. What are the numbers associated? What are my top numbers?
750.
What was it?
750.
750?
Oh, it's 2,000 for the first one. Is that-
Yes, 2,000. So we're taking a fourth of the 8,000. So sales returns 2,000, accounts receivable for 2,000. And then a second one is, you said, 750. Take a fourth of this.
So is that the only exception for return sales, returns and allowance?
Yeah, yep, so for all of our returns, we're just flipping it, except for the sales revenue, sales returns. If you look back when we purchased inventory, when we returned the inventory, it's just flipped. So, yep, everything is just flipped. Any questions so far? Okay, September 30th, we received the payment. Did they get the discount?
Yeah.
They did, yeah, because they purchased it on the 21st. So it's been less than 15 days, they get the discount. How much cash am I receiving? Good guess. So they owe us 6,000, but we're giving them a discount.
5,800.
Say that again?
5,800.
Yep. We're getting $5,000, 820. And you figure that out by, they owe us $6,000. But we're giving them a 3% discount, so that's $180 discount. So 6,000 minus 180. I'm going to credit accounts receivable for how much?
6,000.
For the full 6,000. They owe us $6,000. Even though we're giving them a discount, we're going to decrease it by 6,000 because they don't owe us any more money. And then I've got a 180 debit that I need. What's the account? There we go, sales discount. If they didn't pay on the 30th and paid on October 30th, they did not get the discount, so what's the journal entry? Not for 8,000. Maybe you said 6,000. We're getting $6,000 in cash, and we're going to decrease accounts receivable by 6,000. Questions on that?
Where did you get the 6,000 from?
Good question. So they originally owed us 8,000,
Yeah.
but then they returned
Oh,
2,000.
okay.
All right. Two more topics left. Adjusting entries and then closing entries. adjusting entries is all about recognizing revenues or recognizing an expense at the end of the year or the end of the period. And so the two rules for adjusting entry, there has to be a revenue or an expense, and there's no cash involved. Those will always be true. So, we're starting off with a hard one. On July 1st, Van Dorn took a $50,000 loan from the bank, 5% interest. What's the 1231 adjusting entry? The way, when going over adjusting entries, did they go over like the original entry and then the adjusting entry? They did. Okay, yeah, that's how I like to do it. So on 7-1, what was my original entry? We're getting cash for $50,000, and then we've got a note payable for $50,000. Perfect. On 12/31, when I'm making my adjustment, am I going to have a revenue or an expense? It's going to be an expense, and there's no cash involved. What kind of expense is it? Interest expense. There we go. We're going to recognize the interest expense. For how much?
2,500.
Maybe. Yeah. How'd you figure that out?
5%.
5% of 50?
Yeah.
Okay, so you're halfway there.
It's for 6 months.
Yep. So this is for the whole year. We owe $2,500 for the whole year, but we only had the loan out for 6 months. So for 6 of the 12 months, 1250. So the date is important. And what's my credit? It's not going to be cash because we never have cash in adjusting entries.
Interest payable.
Interest payable, there we go. We're liable to pay $1,250 to the bank at some point. Just haven't paid it yet. That's my first entry. Number 2, we received services for, we haven't performed services, it looks like. What's my original entry on May? Yep, cash. We got cash for 14. Unearned service revenue. There we go. So there's my original entry. On 12/31, we're going to make our adjustment. We're not going to have cash. Are we going to have a revenue or an expense? Revenue. Yeah. Some kind of revenue. Sales, yeah, probably service revenue. We're going to credit service revenue. For how much? typically perform services. 6, 7, 8, 9, 10, 11, 12, for 7 months. Which is 8,166.
So that would be debit?
It's a credit. We credit revenue. And then we debit expenses. What's my debit gonna be? We're gonna decrease the liability. Because remember, this is a liability. We're increasing the liability here. At the end of the year, after 7 months, we're going to decrease the liability by 7/12. Questions on that? We paid $20,000 for 18 months of insurance. On April 1st. What's my original entry? Prepaid insurance, okay. Prepaid insurance expense, which is not an expense. It's an asset for 20. So we're increasing an asset and then decreasing. Good, doesn't really say it, but just say we spent cash. We're almost done, I promise. Closing entries shouldn't take too long.
If it doesn't specify, should you just assume?
No, don't assume, just ask him.
Yeah, the fiscal year like that, on the end of the year, that's what we're assuming, we're doing the investors.
Yes, yep, we're assuming, yeah, we'll assume that. And they'll say that, yeah. So at the end of the year, my adjustment will not have cash, but will have what, a revenue or an expense? It's gonna be some kind of expense, because we originally paid for insurance, so eventually we're gonna have some kind of expense. And that expense is rent expense.
Insurance.
Thank you. Okay, for how much? So we start with our original amount, 20,000. We multiply it by how many months have we had it? So all of April, 4, 5, 6, 7, 8, 9, 10, 11, 12, 9 months.
Would be 8 months?
April, May, June, July, August, September, October, November, December. No, 9. So maybe you're missing April. April, May, June, July.
9 out of 18, so it's 10,000.
Yep, 9 out of 18. You got it. So it's not 12 because we have insurance for 18 months. 10,000, so our insurance expense is 10,000. And our credit is prepaid expense. Yeah. Decreasing this asset. Okay, we began the year with $4,000 in supplies. So it might be helpful to make a T account. We started with 4,000. We purchased 5,000, so we're going to add that. And then we counted up our supplies and saw that we have 7,000 at the end. So how much did supplies decrease? Looks like 2,000. So what's my adjusting entry? Is it going to be an expense or a revenue? Expense. What specific expense? Yeah, supplies expense. For how much? 2,000. The amount that supplies decreased. And then we're going to credit supplies to decrease our supplies. Okay, last one before we do the closing entries.
Does the word expense basically mean that we use whatever it is of the expenses? Like rent expense for 3 months and we lived there for 3 months, no expense?
Yeah, you can think of it. We used, it's a cost that the business incurs. So supplies expense is the cost of using the supplies, wage expense is the cost of having employees, rent expense, the cost of paying rent. Yeah. Okay, the last one, we purchase equipment that will be depreciated by 6,000. So on January 1st, we purchased equipment. Hopefully this journal entry is fairly easy. Debit equipment by 100,000, credit cash or accounts payable or whatever by 100,000. That's our original entry. And then my adjusting entry. No cash involved. Revenue or an expense? Yep. And someone said depreciation expense. For how much? Well, we're depreciating by 6,000 every year, so it's going to be 6,000. What's my credit? What is it? Yeah. Accumulated
Yeah.
depreciation on the equipment. And this is one of our contra accounts. Any questions on adjusting? Okay, cool.
We have to like make sure we thoroughly read and, the sentence,
Yeah.
make sure we get what we actually need.
Yep.
I feel like it could be like maybe some stuff thrown in there, we don't need the kind of.
Yeah. There could be. Yeah. But that's just for every question, right? They could give you additional information and you don't need all of the information. All right, closing entries. So there's three parts to closing entries. The first part is reversing our revenue. Second part is reversing our expenses and dividends. And then the third part is reversing the income summary. thanks for holding out for an hour and a half, I know it's tough. Okay, so here's a list of all of our temporary accounts. Temporary accounts are the revenues, the expenses, and dividends. So reversing the revenue. What's my journal entry going to look like? You guys learned closing entries, right? Yeah, okay.
Yeah.
So service revenue. When I get service revenue, do I usually debit or credit revenues?
You
Hey.
debit the service revenue?
What's that?
You debit the service revenue? In this case or not?
In this case, yes, but usually we credit service revenues, right? And when we close out journal entries, we're going to reverse the revenue, so we're going to debit service revenue. For 50,000. Usually we credit revenues, but for closing the books, we're going to reverse all of our, or get rid of all of our temporary accounts. So we'll debit service revenue and credit what? Yeah, someone said it. Income summary? For 50,000? Okay, that's part one. Part two, reverse our expenses and dividends. Do I usually debit or credit expenses? Usually debit. Usually debit expenses. So in this case, I'm going to credit all of my expenses. So I've got wages expense, depreciation, cost of goods sold, and then our dividends as well. We usually debit dividends, but I'm going to reverse it, credit 10, 15, 15. And then debit what? There we go, income summary. For a total of 30, 46? Is that right? Sounds right. Okay, so there's part two. Now part three, reverse income summary. So my income summary, I had 50,000 as the credit, and I have 46 as the debit. So right now, my current balance is 4,000 credit. So what am I going to do to income summary? Debit or credit? To make this zero.
Debit.
Debit income summary for $4,000 and credit what?
And earnings.
And earnings. There we go. There's the three journal entries. So what's my ending retained earnings balance? Right now I've got 5,000 in retained earnings. I'm putting 4,000 in retained earnings, so I'm ending with 9. Hopefully that wasn't too fast. Any questions on any of this? Okay, cool. Well, thanks for coming, guys. Hopefully it was helpful. I'll post this video to YouTube if you wanted to, for some reason, rewatch it. Thanks for coming.